A new medical device could send thousands of jobs overseas. Experts disagree on whether the tax could lead to higher consumer prices. In 2013, the government plans to impose a 2.3% tax on medical devices. Experts like Kosali Simon of Indiana University's School of Public and Environmental Affairs say it's likely the tax will be like most corporate levies, paid not by corporations but by their customers.
Whenever a tax is levied, even if it's stated in law that it's going to be paid by the company, it's not necessarily the company that's actually taking the hit. Right? Because prices can adjust. So to the extent that prices adjust upwards, the consumer also pays part of the tax.
Cook Group executive Steve Ferguson says the tax could send more manufacturing business overseas since international rates are much lower. But he says he expects his company, which manufactures medical devices like these heart stents, to shoulder the burden of the tax hike.
The prices have had a tendency to go down. There's a lot of downward pressure. Hospitals under a tremendous amount of pressure price-wise, so we're seeing a decline in prices. So I would not see that being added. Some people have thought that it's going to add to the cost of health care. I think it's going to have to be absorbed by companies and on their bottom line as opposed to just adding to the cost of health care.
There are more than 300 FDA-approved medical device manufacturers employing 20,000 Hoosiers. Ferguson says while Cook plans to absorb the hit to the bottom line if the tax is enacted, Cook will still lobby against its implementation.